Welcome to the BIC Magazine Weekly Industry Report, your go-to source for the latest updates in the energy sector. I'm Samantha, your AI podcast host, and today is February 7th, 2025. In today's episode, the latest order on energy production from Energy Secretary Chris Wright, ONEOK's plans to build a new LPG export terminal in Texas City, and other top news from the energy sector this week. But before we get started, we ask that if you enjoy our podcast, please like, comment, and share it with your colleagues. Your support helps us grow and allows us to bring you even more exciting updates from the energy sector in the future. With that being said, let's jump into the first story. The U.S. Department of Energy is shifting its priorities under a new order from Energy Secretary Chris Wright, emphasizing energy production over net zero emissions goals. The directive aligns with President Donald Trump's stance on maximizing oil and gas output, arguing that net zero policies drive up energy costs and threaten energy security. Instead, the DOE will focus on expediting energy permitting, bolstering grid resilience, expanding nuclear power, and replenishing the Strategic Petroleum Reserve. While the order provides little detail on implementation, it marks a sharp policy reversal from the previous administration's net zero by 2050 target, which aimed to combat climate change through clean energy incentives. Despite Biden's push for renewables, U.S. oil and gas production hit record highs under his tenure, driven by improved technology and market factors. Next up, ONEOK and MPLX are teaming up for a major LPG export expansion, announcing joint ventures to build a 400,000 barrel per day export terminal in Texas City and a new pipeline from Mont Belvieu. The $1.4 billion Texas City logistics terminal, split 50-50 between the companies, will be operated by MPLX and leverage Marathon's existing infrastructure to streamline construction. The facility is expected to be online in early 2028, with each company reserving 200,000 barrels per day of loading throughput. The MBTC pipeline joint venture, valued at $350 million, will connect Mont Belvieu storage to the new terminal. ONEOK will own 80% and operate the pipeline, while MPLX holds a 20% stake. Moving on now, according to the EIA, natural gas spot prices dropped at most major U.S. trading hubs in 2024 compared to 2023, with inflation-adjusted prices at key locations in the Northeast and West seeing notable declines. In West Texas, the Waha hub traded below zero for 42% of the year due to pipeline capacity constraints. But the October startup of the Matterhorn Express pipeline helped ease some of the bottlenecks, bringing Waha prices back above zero by mid-November. Lower prices were driven by high storage levels, strong production, and a mild winter that reduced heating demand, keeping storage above the 5-year average. Henry Hub, the U.S. benchmark, averaged $2.22 per million British thermal units, the lowest inflation-adjusted annual price on record. For our next story, a looming U.S.-China trade war could push U.S. crude exports lower in 2025 for the first time since the pandemic, as Chinese tariffs threaten access to a key market. Analysts predict U.S. oil exports may slip to 3.6 million barrels per day, down from 3.8 million BPD in 2024. While China's reliance on U.S. crude has declined, accounting for just 1.7% of its total imports in 2024, the shift underscores a broader trend. China is securing alternative supply from Canada, Russia, and Iran. China currently buys about 5% of U.S. crude exports, but retaliatory tariffs could divert medium sour grades like Mars and Southern Green Canyon to U.S. refineries. Finally, to close our show out, the EIA is reporting that in 2023, U.S. nuclear power plants relied almost entirely on imported uranium, with 99% of the 32 million pounds of uranium concentrate used coming from foreign sources. Domestic production was minimal at just 0.05 million pounds. The U.S. government is working to rebuild its domestic nuclear fuel supply chain, with the Department of Energy receiving $2.7 billion in congressional funding to support this effort. U.S. uranium production showed signs of recovery in 2024, with third-quarter output up 24% from the previous quarter, primarily from operations in Wyoming and Texas. With a ban on Russian uranium imports set to take effect in August, the U.S. may see further shifts in its uranium supply, potentially increasing reliance on Canada, Australia, Kazakhstan, and Uzbekistan. And with that, we come to a close on this week's episode of the BIC Magazine Weekly Industry Report. You can head over to bicmagazine.com to read the full stories discussed today, and make sure to follow us on all of our social media channels so that you never miss out on the latest developments, updates, and announcements from the energy sector. Have a great day, and remember, it's what we do together that counts.